All right, we got famed market strategist Ed Yardeni right here on set, president of Yardeni Research. Tough, great stuff. That's all I'll say. Great stuff. All right. Motorboats are not going to destroy the world economy. The Navy's mostly at the bottom of the Persian Gulf.
Absolutely correct.
You heard the Army intelligence veteran.
That was a great interview.
Yeah, well, he's a smart fella, and I just, I think that. My view, you see through this. There'll be, you call it the fog of war, you are correct, but you have to see through it. There's a lot of good news that even came out today.
Yeah. I think what's going on with the market is they want to see tankers actually going through the Strait of Hormuz, and that may occur in a matter of days, and then we'll see. I mean, if the Iranians manage to get one shot off and hit some target, the market could go down. But geopolitical crises tend to be buying opportunities in the stock market. So I think any real sell-off here would in fact be a buying opportunity. I would not be selling into this environment, because I think the market will rebound very quickly once the price of oil starts tumbling down on the perception that this is working.
So numbers coming out today, even though no one's paying attention to them except professionals like yourself. But for example, non-farm productivity, last 4 quarters, 2.8%.
Fabulous.
A big number.
Big number.
And so that means wages are going up, compensation is going up, but the workforce is earning it.
It's earning it, exactly.
And so unit labor costs, which is kind of the ultimate cost, it's the cost of labor, in some sense, an inflation rate, 1.3%. Those are...
And unit labor costs really are the underlying rate of inflation in the labor market.
Right.
You put them on a chart, that series on a chart with the CPI, and you really can see that they really drive the inflation rate. So inflation is going down. I think by the end of the year, it'll get down to 2%, maybe sooner.
The energy jump, okay, we expect
that's going to hit the next few months, right?
And then eventually, aren't you going to slide back towards 60 or into the 50s? We're producing a lot of energy.
There's a tremendous amount of oil around the world. There was before this conflict, and there still is. It's just we need to get the Strait of Hormuz opened up. Once it is, I think you'll see the price of oil coming right back down to $60.
So I like that. So the idea, you're saying as a benchmark, you need to see a couple tankers actually get through.
That's what you need to see, because that would give the market a great deal of confidence that, the planning was extraordinary. I mean, it was obvious, as your guest said before, that the Iranians have been threatening to close the straits for a long time. We knew it. The Israelis knew it. There's no way they weren't planning. And so, as you said, the Navy is down deep below the ocean,
below the waterline.
Below the waterline, and so now we've got maybe a bunch of recreational speedboats that have missiles on them, but they can probably be taken out. But the market needs to see that, and if we have an incident or two, that could lead to a significant sell-off in the market, but that would be a buying opportunity.
So other stuff, I mean, I hate to be boring about it, but your supply managers, very strong services, pretty good manufacturers, the purchasing managers. I mean, I know that it's not as sexy as Kristi Noem leaving the Department of Homeland Security.
Well, it's sexy to economists like you and me. I mean,
it's an important number.
Absolutely, because the manufacturing purchasing managers index has been below 50 for 3 years. And now all of a sudden we got 2 months in a row where we're solidly above 50. And the other thing is the non-manufacturing purchasing manager services was extremely strong in February's blowout. So you've got kind of the entire economy in these two indexes showing signs of actually picking up.
And a long time theme of yours is the strong profits numbers.
Yeah.
And at some point, if that doesn't change, that's got to resurrect the stock market no matter what happens in the fall.
Yeah, I think I got that from you. Don't you have that famous quote, profits being the mother's milk of capitalism? I mean, profits is really what makes the economy go round and round. I mean, a profitable economy, profitable companies, guess what? They hire and they expand employment. By the way, I think the labor market's already showing some signs of actually perking up. We saw that in January, and I think tomorrow we may very well see another strong number.
What about, would you recommend the Federal Reserve do anything during this wartime?
Do nothing.
Right.
I mean, they're boxed in, but even before the war, I really felt that the economy is doing extremely well, and there's no particular reason to lower interest rates. I think bond yields, as we discussed previously, bond yields around 4.5%. That's normal. That's actually a healthy sign of a healthy economy. So
in the whole period that you and I have been doing this stuff, it's about 40 years.
Yeah.
Okay? Wouldn't you say a 4% or whatever it is today, 4.10, 10-year is relatively low?
You know
easy?
what I would say? I would say it's a fair rate.
Fair rate.
You know, in other words, you want to make sure that lenders get the right return. You want to make sure that capital markets are properly allocating capital. And I think this kind of level does the trick. And the proof is in the pudding. I mean, we're basically at the dual mandate nirvana because we've got the unemployment rate at 4.3%. You know, how much longer do you want it to go? 4%? Well, we're pretty close to that. And the inflation rate, excluding this cockamamie owner's equivalent rent,
Right.
is at 2%. Is at 2%.
Yes, I agree with that too. So look through this. Wait for see a tanker coming through the straits. I like that. I'm going to hang on that. That's a very good benchmark. Let me just one more Fed thing. Kevin Warsh coming in.
Yeah.
I'm going to assume he will be confirmed.
I think it will be. Yeah.
How's that sit with you?
It's fine. I mean, he's one of 12. You know, he's one of 19 actually on the FOMC committee. But in terms of voting, it's one of 12. He doesn't want to be the lone dissenter. You know, and I think other Fed officials are kind of in the same camp that I'm in, or I'm in their camp, and that is the economy is doing fine. Why mess with success?
You know, that's an interesting point. It'd be nice, much less activist central bank. Actually, in some sense, less activists in general from Washington, D.C. We'd like that.
Yeah, I mean, it's good for my business to have to constantly be thinking about what the Fed's doing and writing about it. But I really would like to see the Fed making fewer headlines.
Well, I agree with that. Yeah. I'm very biased. I think your whole scenario is correct.
Thank you.
Terrific stuff. Ed Yardeni, he is a famed investor. He's a famed strategist. He's a famed economist. You're very kind to come on the set.
Thank you.
Appreciate it. All right, folks, coming up. Kristi Noem's out. Mullen's in at the DHS. Trouble is they won't even give the DHS a budget in the wartime. Go figure that. You don't. It's not good. None of it's good. Anyway, we got Liz Peek. We got Byron York. And we'll try to talk about it and put it together when Kudlow returns.